On a day like this, Kevin Kelly, what do you want to do with your portfolio, knowing that we're about to see an onslaught of sellers?
Well, you don't have to do much if you have conviction in your positions. Otherwise, you can go to cash. And I think what you're seeing right now is there's not a lot of conviction in central bankers, and that's the problem. I mean, they've propped up this market, and right now they don't think it can be propped up anymore. If we think about what's happened over the last 3 to 4 years, whenever there was bad news, that was good news. They thought that central bankers were going to come in and save the market and prop up with some more monetary stimulus,
right.
But that's not happening anymore. So.
Well, yesterday, Janet Yellen was very clear. She basically said, Dagan and I noted that this was probably the most important comment, that she said that if, in fact, things deteriorate further, the path to lower interest rates is there. Let me ask you, Martin Sorrell, how many countries is WPP in?
112.
112 countries. What can you tell us about the global economy right now?
Well, I mean, it's mucky. It's certainly, there's a lot of volatility. We're seeing it this morning, and there will continue to be. I mean, we see a world, actually, if you went back, in a sense, there's a little bit that's new, obviously, because there's increased uncertainty, but the pattern is very similar since about 2010-11. We saw a sharp snapback in 2010 following the crisis of 2008, 2009, and then we saw steady growth 11, 12, 13, 14. If we look at our own results, our results coming out, I mean, a close period, but right. I think it's safe to say that, you know, each year we've had record results, and 2015 was no different. Having said that, we're prepared for low growth, probably worldwide GDP around 3.5% nominal, 3 real. Inflation is very, very low. So no pricing power, and focus on costs. We think that's the wrong way for clients to go, but you know, you're batting against a headwind here, which makes it very difficult to convince people of anything else, particularly when they turn, you know, you get up at this unearthly hour and you get right. thoroughly depressed for the rest of the day and the rest of the week. Thank God it's only 2 days of the rest of the week, by what you just went through.
Yeah.
I mean, I sat here wondering what the hell did I do getting up so early.
And it's been a brutal year, Dagan, and when you see this kind of sentiment,
we'll continue to so because of the volatility. I mean, the irony about it, with the oil price at $26, you would have said tax cut, consumers feeling a little bit better, but they're still repairing those damaged balance sheets that they had in 2008-9. Corporates have very strong balance sheets. The banks, obviously.
But are they spending their money? Are they investing? No. I mean, we see it like from the durable goods orders last week. It indicates companies are, in fact, not investing the way you would like to see in a recovery.
All central bankers cannot explain why CapEx inside companies and even OpEx remains constrained.
I think it's because of this uncertainty, Dagan.
And I think that there's something more insidious and worrisome going on in terms of investors, and it's something that Kevin touched on, that investors are losing faith in central banks around the world, that they don't think, and Janet Yellen touched on this in her testimony, sounded very downbeat on the economy, acknowledged inflation expectations are easing in the United States. And can central banks do anything to stop the volatility, to stop what looks like global deflation with negative interest rates? I think a lot of this recent selling started with the surprise.
I just want to jump in on one
DOJ, the Bank of Japan going to negative interest rates at the end of January.
Right. And investor sentiment, to the point that you guys are making, right now it literally is low as it was in 2008, Maria. Literally, we had markets that were down 40% in 2008. This is nowhere near that kind of correction.
Right. This is not 2008.
Investors are feeling as bad, if not worse, as 2008. And that reflects what's going around the world in the news like we see in the morning. And that clearly is affecting their spending habits and their investing habits.
Well, every central bank, when they poured their money into their systems, where did it go? It didn't lead to the real economy. What it led to is maligned investments, and what it did is it expanded the multiple. So if you look at what happened here in the U.S., we went from a 15 PE on the market all the way up to 19. You had companies trading at all-time highs, and they were also buying back their stock. They didn't put it into the capex that we were just talking about.
I think this is a really good point, because you are seeing lending going on. You saw a record amount of deals last year, so you're seeing an enormous amount of M&A, but you're not seeing the money go into.
But those were not deals for growth.
Right.
Those deals were another cost platform that they.
Or you acquire growth. You can't find growth, you acquire growth.
Well, yes, but I think, you know, the way we look at deals, we always, what do we capitalize? We capitalize a cost efficiency, and when people come in with revenue synergies, we look at them as they came from Mars. You know, there is a sort of a philosophy that you focus on the tangible cost rather than that intangible, fluffy revenue gain. And the other thing is you have disruptors, high-tech disruptors, you have zero-based budgeters, and you have short-term activist investors. The activists say they're long-term, but their impact is short-term. And you take those three things together, add it to the worldwide economy, low inflation and lack of pricing power, you have a cocktail which says we're just going to carry on in the same way with low growth.
Yeah, and you mentioned the Bank of Japan move. A lot of people thought, okay, well, now that the Bank of Japan is negative, perhaps we see others doing that. But I think just the comment that Janet Yellen even referred to it yesterday, being, look, we don't think we're going to have to go negative, is worrying.
Right. That is all of this, the negative rates, and by the way, Sweden cut rates even further below zero overnight. It is throwing gasoline on a fire where people feel like that the global economy is in.
Well,
it's not helping.
Congress brought up the negative interest rates to her. She didn't bring it up as an active policy tool that they're looking to do right now.
Right,
so let's just make that clear.
She didn't come up with that.
Yeah, exactly. One of the problems with the market right now is that investors are really worried because 3 of the new governors on the voting committee are hawks. They're not doves, and the Fed has not backtracked from gradually increasing rates, which everyone has interpreted as 4 rate hikes this year.
Was she sort of saying that raising before Christmas was wrong?
Well, that's what people think. They have no control. They have no control over what's going on, and they've made a major mistake.
Kevin, you would agree she couldn't have been more dovish yesterday. I don't think she could have possibly said anything more dovish.
In other words, you're suggesting that we're going to have easy rates, low rates for a long time.
And she basically pretty much outlined that she would only raise interest rates if the economy called for it. And I don't know what else she could have possibly said that would have been any more dovish.
Yeah, but the problem is that look at the economy here and look at the jobs number. They have their dual mandate, and so you have these governors that are on the board, and they're like, look at the jobs, and they've never been better. And look at the JOLTS number. I mean, it's crazy to think that we're doing so well over here. We used to be the economic straw that stirred global growth. Now global growth is stirring us.
But I don't know about that, because I think now there's a whole new, re-ask in terms of how strong this economy really is. When you've got a Federal Reserve which is afraid to continue a path that they put in place at the end of last year, that tells you there's a real question in terms of how strong this economy truly is.
Well, and then you've also got the strong dollar, which is driving down the reported earnings. I mean, not looking at the underlying earnings of U.S. corporates, and that makes them even more cautious.